Hey there, welcome to week 44. It's Les Solgrove, Simply Des Moines market values for October. No, we're into November. November 2nd. Halloween's over. Congratulations to the Dodgers beating the Blue Jays last night in great fashion. What an exciting game, extra innings and I don't know, controversy, all that kind of stuff. It was kind of like watching professional wrestling on the baseball field. But anyway, hey, let's get started with the show this week. Okay, I was kidding about the professional wrestling. I thought there was going to be a fight there in that fourth inning. That was kind of a interesting go around there. Anyway, October has left us. We have the end of month review. It is the No Tricks, Just Treats October market review for Des Moines and Central Iowa for week 44. Let's take a quick peek at the dashboard and a couple of slides after that before we get into the end of month stuff here. So here we are sitting at 4,464 listings, and I really thought we would hit 5,000 or 4,500 by this time last week, but it doesn't appear that we did. And you know what? There's a couple of things that happened this week that I think maybe kept us from doing that. We'll point out over here that mortgage rates did drop by two one hundredths of a percent this past week. They're down to 6.17 on the national. Now they did go up locally here after the Federal Reserve lowered the prime borrowing rate for the Fed. So mortgage interest rates did not like that. The fact that they've actually finally came through with that reduction and they jumped up a little bit, but I don't think we're done yet. I think we're actually going to see rates continue to come downward just a little bit more before they either stabilize, which is what I'm hoping for, or hopefully not go back up. But what caught my eye this week is, how can we go from 4,492 listings last week down to 28? So this is what it looked like on the screen here. We dropped our inventory just a slight bit. However, we brought in quite a few new listings this past week, and we brought on about 300 and some, but it's basically these canceled listings is which really brought us down. We should have been up just slightly, which would have probably put us over that 4,500 mark. But this past week we had a pretty large number. I mean, it's the largest number so far this year of canceled listings, and I tried to figure out where those cancellations were coming from, and they basically came from some new construction out there. So I don't know if builders were taking some specs off or maybe repositioning for the year, but these are a large majority of these 99 reductions came in the new construction field. So that's one of the things that makes me go hum a little bit or question things. So anyhow, let's jump now into end of month report and look at briefly here the Metro Homes for Sale breakdown for the month of October. And you know what? I look at these graphics every month and I go, how do we know if this is good numbers or bad numbers, or how do we really tell whether this is important information? I mean, other than the fact we can see that, for example, Johnston, for example, has 119 listings. Well, but without any context, we don't know if that's up or down or good or bad. So what I did was I looked back one full year ago. So I compared October 2025 to October 2024, and it brought up some interesting information here. And this is where I think there's going to be some value in this graphic moving forward. I'll continue to do this type of analysis every month. What you see here is we have 5 parts of our metro area that are actually down year over year. 3 of them are down, single digits or less than a single digits, but we actually had 2 parts of the metro that are down by double digits. We had Bondurant is down in inventory by 14.6%. That's a pretty good number. And same thing with Clive, at 99 homes currently on the market, that's down by 16%. And I realize now, next month I'll do this, I'll include the count over to the right of the year over year change. So I kind of went down a rabbit hole this morning when I looked at this, and Spent quite a bit of time working on this. That's why this show is coming out a little bit later in the day here. But what I do find interesting is, for example, right here, 85% increase year over year, Des Moines East. So the east side of Des Moines, which was, we predominantly consider that kind of some of our mid to low price point inventory. And this is telling me that some of those low prices of homes, low priced home inventory is coming back up again. In fact, there's nothing for sale above $300,000 on the Des Moines East area there. But with having 52 homes on the market, and that's up 85%, that's quite a jump from the same time last year. And that's our leader this month. Coming in second is the northwest part of Des Moines, which is basically the Beaverdale, Merle Hay area. And they saw 82% increase year over year of inventory from October of last year. So that's really, those are some pretty good sized numbers. In fact, there's some other areas here. 30% down here is the Polk City area, 30% higher inventory at 52 homes, 41% down here in Windsor Heights. So um, I think that this will become a little bit more valuable to you guys every month when I put this out. And again, I will include the total count on the right side of the year over year change column over here. But it's always interesting to see what parts of the metro are really taking more listings and which parts are not. And this is good information for you when you're out listing properties. Let's take a look at the same information on the sale pending side. And again, I will do the same thing over here on the right. Let's go ahead and drop the graph in. And, I think this one, while it looks bad because there's so much that's down year over year in the sale pending categories, it's not surprising because we really are kind of down in our sale pending. So rather than focusing on, how much everybody's down, other than the fact that maybe Clive is down by 50%, up here, that's kind of the high point. But and 42% in Des Moines downtown. Some of that could be just some of the condo townhomes down there, or the Sherman Hills area there. But as far as increases of area, Des Moines West, remember, Northwest there was up, but yet it's down in sale pendings at 16.4%. However, Des Moines West, which is your North of Grand and Ingersoll areas there, 70% more homes under contract this time of year than there were last year. So again, utilize this information to your benefit when you're talking to home sellers or home buyers. Where's a good place to buy that's got good sales activity, or is this a good time to sell because of the marketplace? This is in the time of year. I'll update these moving forward so they will show both the year over year change and percentage, but also the counts as well here. So hopefully that's good information for you there. Okay, so let's go now and take a quick peek at some of the standard graphics for the end of month report. This is new homes listed. We brought on 1,409 new listings, the most in any month so far this year in the month of October. And I think a lot of that is that anticipation that mortgage rates were going to drop. And I think a few sellers were feeling like maybe, that's kind of like the opportunity to get listed and be on the market here. And that's really a good sign. Seeing this is the ones that came on the market, not the build of total inventory. So these are actually homes that were listed in the month of October. And it's really only second to April, which was our spring market, April and May. And then right after the 4th of July, it looked like we had a little surge as well. But it's good to see this inventory start to come up. It's kind of following the trend line that we saw last year. Those are those black dashes. So if we were going to continue to follow the trend, we could expect a drop in the month of November. But again, I think with rates hopefully coming down or staying down, that we will see this number stay up at least one more month before it does go down again. As far as sale pendings go, again, look at that. We're pretty much right on track with last year with the little dashes on there. And it's actually been pretty stable or pretty flat for the last 3 months. We're just over 1,000 homes going under contract each month. And, our high point is typically in the April market. So this will be a market or a graphic next month if we've seen any changes due to the mortgage interest rates and home buyer activity for the month of November, which is traditionally a slowdown month. If we see this increase or even stay the same, that's going to mean we're going to really finish the year strong. If it goes down to the last year's numbers or even below that, then that means we're probably going to see a little bit of a slowdown, hitting a little bit faster than what we expected. But I don't anticipate that. So keep an eye on that. As far as seeing the inventory broken down by price points here, again, the majority of your homes for sale are between that $200,000 and $400,000 price point, and that's pretty much, a pretty obvious number this month. We've seen the price points on both sides kind of try to climb up to those closer numbers at the 1100 and 1143 are the top numbers, but we're actually seeing that inventory kind of drop a little bit. So really, when we talk about where's the inventory coming from or what price point is it coming in, it's in really that good price point, those good price points we like to see. Even under 200 to 100 there, 655 homes came on the market. Then the sale pendings there, again, we're behind the inventory coming in, but at least we are matching, this is generating sales in those price points. Nothing would be worse if we were seeing inventory levels increase and yet see decreases in the sale pendings in these price points. So, I'm pretty satisfied with that. I think at this point, I would sure like to see sale pendings higher, but we'll see what happens as we move into next month here. As far as closed sales go, last year you can kind of see based on the fact that the mortgage rates were really coming down. We had a strong September that made us have a strong October. We've had a pretty strong September and August. Really didn't drop as much from those 2 months that we have typically seen in the past. And again, pretty close to where we were in the month of September, 1,074 versus 1,050. And again, I think depending on what we see, I could very easily say that we should be above last year's numbers as we move into November. And a great proof of that would be if we equal October's closed sales coming up here. As far as where that puts us at the end of the month for year to date, we're currently at the end of today, we're at 11,672 closed sales, and our target to beat last year's that dashed line going up from 2024, 13,226. We've got basically 60 days to close, less than 2,000 listing sales here. So I think that's very, very possible. Again, I think we're going to beat last year's sales numbers, but any hopes I think at this point of getting above 14,000 might be a little over hopeful there, but we can always, depending on what happens here in the next 30 days, we could certainly close over 14, but it's going to be probably closer to that 13.4, 13.5 is where we'll probably end up the year. Pricing wise, this has been really the big story all year long. And in fact, again, notice the dashed lines. That's pricing last year, and we are considerably lower on our list prices so far this year. And that's obviously what I was showing you earlier, where the listings coming in the market were in that $200,000 to $400,000 price point. Well, that's right here. That 329.9 sits right almost in the middle of that, and it's quite a drop really from 339 to 329. Just almost a $10,000 drop. From last month. That's benefiting first-time home buyers and the lower end markets out there. As far as how we're coming along so far on price reductions, this is a huge story as well. Grab this graphic off of the end of month report that's available at DesMoinesMarketValues.com. 2,377 price reductions this last month alone, and that is by far the most price reductions we've seen in any month period there. We came close in the 2000s back in July, and then everything before that has been under 2,000 reductions. And again, no big moves in the price increases. So as far as months of inventory, everything above $600,000 is in a buyer's market right now. The 700 to 800 and 900 to $1 million are just barely over into a buyer's market. But you get above $1 million, and if you're spending that kind of money, you've probably got the best selection you're going to see maybe all year long with 19 months of inventory over there. The under $600,000 price point is either right at or very close to a balanced market on both categories, with the exception of this $100,000 to $200,000 price point. We say that seller's market is between 4 and 6 months of inventory, and we're sitting at 3 months, 3.1 months here for that $100,000 to $200,000 price point. That means that homes are selling just a little bit quicker there than any other point in their pricing. The rest of them are all hovering right around that 3.5 to 4.5% per month, 4.5 months of inventory. So moving into fall, I don't think home buyers are going to really have to feel like they're really having to make decisions on the spot, unless it's that perfect home that it's just, you can just tell when you get in those that they're going to go quick, and you may not want to wait too long on those. But home buyers and home sellers both have kind of that equal amount of time right now to sell a home and then find something else if they're a seller. And as far as pricing and the median pending price goes, just like in the active pricing or the list pricing, we're seeing a pretty substantial drop in the pending price at pending, down to 314.9. It's not our lowest. February we were down to 3099, but it's right up there with what we saw in January, March, and April, right around that $315,000 price point. It looks like it might stabilize again next month, and then as we get into December, sometimes we see some year-end builder sales that come across that tend to bump that up, and that's probably some year-end incentives that kind of bump those pricing. So maybe we'll see that this year, maybe we won't. As far as median sale price, and then also tagged down below there is days on market. We continue to see our sale price rise, but not dramatically. I mean, this is probably the most dramatic price increase we've seen month over month, where before we've been trickling up around 2,000, maybe 3,000 or 4,000 at the most earlier in the year. But really, for the most of this year, from April on, we've been sitting right around that 3 to 305 price point. And then this past month of October, we were at 314.9. So again, some of that new construction's probably closing, which is making that higher price, that median sale price, go up a little bit. Will we expect to see that kind of continue? It's hard to say, but if we look at the very last slide here of the show, you'll see here that at 314.9, median pen price and median sale price are exactly the same, where there's usually a little bit of a gap between those. So it wouldn't surprise me to see pending prices come down just a little bit more, as we talked about. But I'm not sure that we're going to see sale prices continue to rise. I think at this point in the year, those will probably flatten out and then start their rise again in January. But again, looking right here at this green line, we've seen since March, we've seen basically either flat, April on, we've seen median list pricing come down consistently every month. And so we really kind of expect that to happen there. So continue to happen. So, all right, gang. Well, that's the show. You know what? I'm at 989, I think, subscribers. Would you all please do me a favor? If I've got one ask for you, is there's no cost to this. There's no commitment, nothing like that. Just simply go to DesMoinesMarketValues.com, click on one of the videos or this week's video, and while you're there, if you haven't already, hit that subscribe button. And if you are there, go ahead and hit the thumbs up button on the video, so I know that you're watching the videos this week. But please, let's see if we can hit over, maybe put me over 1,000 subscribers this week. This would be really cool. Would love to be able to do that. And it's just a great testament to you guys out there that are watching and sharing this content. So, all right, gang, that's the show. We will see you all again next week, and get out there and enjoy the cold weather. It was cooler. It's cold weather now, so dress up, and we'll see you all again next week.